Good afternoon, everybody. I'm Mark Sebastian, the founder of OptionPit.com, and this is the Option Pit Trade Idea of the Week. Reminder, options have risk. This is for educational purposes only. None of this should be considered investment advice. If you want investment advice, consult your financial professional. Basically, if you hear something and then that I talk about and do something on it, it's your own, and then lose money, it is your own dumb fault, not ours. So, reminder. So let's talk about the market. Well, here we are, and we've had a couple of ugly days here in the SPX, to say the least. I think chart watchers might say that this is not a pretty pattern, and the fact that we had an up market and the fact that we had an up market in China and we're kind of failing to recover here, today looks a lot like this day, which was Tuesday. So, and we're now 70 points lower than there. I'm not saying that all is lost and we're all done for, but if you look at the VIX futures, all right, I want you to take a look. This is a new feature on Liveall. Take a look at the VIX futures. And what I want you to note is that VIX is trading at a premium to the January weekly that expires next Wednesday, to regular Jan, to all of the weeklies. It's trading above February. February is trading above March, and March and April about even, and are kind of tied with May. Looks like there's a little Federal Reserve-y thing in April pushing it up, but if you look out, the chart is super what we would call backward in the industry, which kind of means front month futures and the cash index is trading at a premium. S&P 500 returns, when we see something like that, are extremely negative. It has a negative expectancy, I might say. Now, right now the market's up and the VIX is down, but I do think that there's some real issues there. So I want to take a look at VXX. All right, now VXX is down a little bit today, but if you look at what it's done the last couple of days, and with kind of this backwardation, as now what we might call a positive roll yield. Now, one of the problems, so as I look, I think that there is potential on Monday for VXX to rally significantly. All right, and what would cause it to happen? A down day Monday. Monday is the most, of all the days of the week, Monday is the only one with a negative expectancy statistically. And if the market ends up down on the day, well, we can see the rut is down, S&P up about 5, then there's a real chance that VXX could be trading 24, 25. All right, so it would not be that difficult. It can make moves relatively quickly. So I think that we are down Monday and then potentially up all week next week. I think that's kind of the way I see it, and that's how I might play it. So what I'm going to do is simply buy a call in VXX. All right, I'm going to pay the offer. I mean, it's legitimately a penny wide. When you're dealing with penny wide markets, it typically does not pay to quote unquote squeeze, because if you chase, you end up paying a lot more. So in this case, I'm going to pay 108. I'm going to buy one call for 108, and my goal, could be as early today, is to sell this thing out at, hopefully close to $2. All right. So on that note, if you have questions for me, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. We have a check your emails for in this email is an invite to a webinar I'm doing tomorrow at 10:30 Eastern Time on risk management and adjusting positions. And it's going to be, this one's titled An Introduction to the Principles of Risk Management. So if you're a budding or professional trader, I think hopefully you'll get something out of listening to me talk risk. All right, folks, I hope everybody has a great day, and I will talk to you soon.